Alrighty. Doc here from North America. Good morning, good afternoon, and good evening. There we go. And we have the spreadsheet up this morning over there on the screen. So we can play with that at the same time. As you can see here, coming in. Now, what we have is for the last 45 years, we have some type of record documenting the accuracy of our algorithm. And so, hey Janos, how you doing? Hey Robin, how you doing? Well, still shocked how much that move in Nevada went up. Yeah, Nevada. Yeah, hey, here, let me see if I can throw that up on the screen there. Let's see. Yeah, that's the. Yeah, it's 10 points. You know, not bad. They I guess, what do you call it? What's the best way to describe it? They're running back to the Magnificent Seven. I guess that's what they said on a couple of the different talking head shows. Are heading back to the Magnificent Seven. In other words, go back to what worked, right? I think they're insane, but that's quite all right. Let them be that goofy in the head. Let's go over to here. Let's see. I'm opening it up now. Let's see what Nevada did. Well, you did the right thing. There's Nevada, and you'll see it right now, right there. So they've perked it up. It's still in a weekly sell though. So as long as it's in a weekly sell, I'm not the bravest one to think about, being long in it. To me, it's more than likely a dead cat bounce. That would be the best way to describe it. Let's see. Pink and large and line. There we are. So, and then we got into the buy there, didn't we? There's the buy right there. And then we're now coming out of the sell, trying to get into the buy again, like so. That's yesterday. Is that yesterday? Or is that today? I guess that's this morning. So it's up at 119.74. Yeah, I just saw it. Just ticked to 75. So that's today. It didn't make it into the buy yet. Let's move that out of the way. Let's put this in there. I think I put it on the spreadsheet as a buy this morning, though. I must have seen this thinking it was in the buy. So, yeah, let's go down and check the spreadsheet. Let's see, Nevada. Yeah, I put it in the buy. It's really still in the sell. But today, if it closes here, it closes in a buy. How many days does it sell? 2, 4, 6. 6 days in a sell. DS. There we are. Interesting. I didn't realize that that's today's chart. In other words, I thought it was automatically in a buy from the move yesterday. Let's go over to the beta. I trust the beta more on this nowadays. Let's see, Nevada, NVDA. Yeah, it was still in a sell there. Up bar, but still in a sell. And we're in that weekly sell there still. But today has promise. It has very good promise. You can see that there. We can change that color right there. Where's the color changer? Why can't I? Oh, there it is. It's got the great potential to go into a buy today with no problem. As long as it stays up here. I would imagine it'll stay up here. But it's in a weekly sell, so I'm not exactly the most bravest long. One thing you don't want to be is, if it's going to go into the daily buy, you don't want to be short, but at the same time, you don't want to be long until it gets into that weekly buy. Unless you're trading binaries or something of that nature. Let's see. I cut prior calls, moved them during early days trading. Despite that, all is about the central banks. Oh, yeah, totally. They're the buyer of last resort. Central banks are the buyer of last resort. On hike, no action. One cut is what we have this week. I got confused a bit. We had short signals on weekly and daily. So after the fundamental jump, I grabbed puts. Now they appear to be today, but expire on the 16th of August. Cool. Cool. All right, so we have a spreadsheet, and it shows you. Let me show you what's on the spreadsheet. If we can find the right mouse. See, that mouse should be right there, and that mouse is right there. All right. And what we do is we have, just a lot. We have the commodities. We have corn, 9 weeks in a sell, and soybeans, 8 weeks in a sell, and wheat, 8 weeks in a sell. And then we have crude oil, 2 weeks in a sell, 1 day in a daily buy. Gold, 4 weeks in a buy, 2 days in a daily buy. Silver, you see it goes on and on. If it's in a weekly sell or a weekly buy like there, or a daily buy or a daily sell like copper. Copper is 16 days now in a daily sell, and 2 weeks in a weekly sell. When they're both aligned, we take that direction. And if we're in a position and we get a daily sell when we're in a buy, then we'll sell some calls against it, that type of thing. And in other words, we adjust ourselves into a neutral position. So we look at the markets in 3 ways: long, short, or neutral. Now, obviously, if you have no position on it, you're neutral, and you have cash sitting in an account. There's Bitcoin, the ETF. There is the dollar index. We should change that. I'll have to change that. It says USDS and then CME. So that's been in a weekly sell for 3 weeks and 1 week in a daily sell. And when we look at the dollar index itself, then you can see the charts. It confirms to it. And that's how we basically do this webinar every day. We look at it in an algorithmic way with a 45-year view, as we look and see, what are the direction? What's the trend? I guess that's the best way to describe it. What is the trend? And that's usually the answer to that. Let's see, where is that? There it is, right there. And we go like that, and we'll put that up there. Upload. All right, now let's show you the dollar index on the beta. Right there. And right there. You see it's trying to lift up, which is the screwiest thing in the world, of course, because of all these interest rates. Now, we've been in a daily sell. This is the 4th week we're going into the daily sell now. We've been 3 full weeks in it. And so you can see there, and as I guess if we, we can adjust this. How do we do that? Go like that. Let's see if I do it right here. You can get it to line up with the bars below. Let's see if we go like this. That does it better. There we are. See, it's more aligned that way. If I just grab it here a little bit, like that, it lines up. You can see there's 2 days there in the sell, going on a 3rd day now, I believe. Let's see, where is it? Yep, okay. So that's today. That's the 2nd day now. We're going into a 2nd day of a sell. By the end of the day, if it's still in the sell, This histogram is minus. It'll be in a sell. Now, obviously, even if it's up for the day, but if the histogram is minus, it tells us that the pressure is still on, and this is just like a dead cat bounce type thing. All right, and so that's what we look at every day. That's the way we are. We follow our algorithms, and we've been doing it for 45 years. We have a spreadsheet that keeps track of it. It gets sent out to whoever wants to see it, and we do it for free. It's no problem at all. You just contact right here if you're interested in a free Excel spreadsheet. Go to this site right there, Chicago Quant Technologies. Whoop, right there, ChicagoQuantTechnologies.com. There's the website right there, and you can have it for free. .com. There we go. And up top, we still have the Decoding page, reminding people that's who is helping to sponsor this webinar, is Decoding, and a subsidiary of the Swiss Bank, and that's what it's all about. Okay, Yoda says there, we don't show signals on weekly day. Okay, I got confused about. So after the so that's not no. Okay, so after the fundamentals jumped, I grabbed puts. Okay, well, we're in that weekly sell, so I don't think I'd be that panicked about it at the moment. No doubt that there's going to be a little pressure on the upside here because it's trying to go into a daily buy today. But that's the action we're seeing here now. So, I think that what we really see, if anything else, is that it's, you can see here the stock market. They took it up after the market closed yesterday. Let's go find that right there. You can see that that's the U.S. market closed right there. And then they just took it up in the after hours. Europe started to sell it down. This is the beginning of European trading right here. And they sold it down. And then U.S. markets, or someone started to step up and buy it about an hour and a half into the market, and now we're back up to these highs that were generated last night by the Fed or whoever. So let's see. So what about Powell and the SPY and VIX until mid-August? Well, Powell basically said it's like a 50-50 chance to lower rates. That had to make them feel pretty good, because the market is saying it's a 100% chance that they're going to lower rates. But then they've been saying since November of last year that it's a 100% chance that they're going to lower rates. Now, I heard someone say this morning, which I think all the time, and that is, if they're going to lower the rates 6 times, do they think a disaster is coming here economically? When you don't have a very clean media anymore, that doesn't tell you anything except for their political spin all the time, you really got to wonder, what kind of mentality is that? They're going to lower rates 6 times? Do they think the economic system's getting ready to collapse? 6 times, is that 6 quarters? So that's 2 points almost. That's 1 3/4. We're at basically at the we're at where are we at? We're basically they're saying they're going to bring it down to around 3.5%, which is historic. That's the norm. That's the mathematical mean norm in America. Has always been around the 3.5 area. We under Jimmy Carter it got up to 21%. Ronald Reagan came in, it topped out as soon as he got signed in. Ronald Reagan it topped out and it fell all the way down to 0. So, over the years and decades. So basically, when the Fed, we don't hear them say that stuff anymore. Now it's just the speech in November of 2023. People take that, since he hasn't said no to that. But when you think about it intelligently, or just think about it in general, a seven, six cuts. Is it seven cuts? I'm sorry, seven cuts. The least would be a quarter each, right? So that's 1 3/4. So he expects to basically bring the interest rates down about 2%, which would bring it back to the historic. It's not going to zero again. It might go to 2.5% or something like that, depending on inflation, or 2%. Remember the 90-day bond. Let's put that up on the screen here. The 90-day bond, or I'm sorry, the 90-day bill represents inflation and what they think about inflation. Okay. So here it comes right here. You can see here is the 1 month. It's trading right there at 5.38. Okay. And the 2 month is at 5.36, and the 3 month is at 5.265. The 4 month, goes out to 1 year is at 4.7. So they figure for sure, within a year from now, interest rates are going to be coming down. That's what the markets are telling us. But right now, during the the Biden administration, or Obama, Biden, Harris type of administration, whatever you want to call it. We're not even sure who's in charge of what and who's doing what anymore. But, thank goodness for the U.S. Constitution and the 4 different sections of the government where we don't have a king or a prime minister that has more influence. We have a president that has a certain amount of influence. We have a Senate that has about the same amount of influence. We have a House of Representatives, which is elected every 2 years, which is about the same influence. And then we have a Supreme Court that is there a monolithic time, trying to follow all the time the Constitution. In other words, is it constitutional or is it not? Is it in the Constitution that you can do this, or is it not in the Constitution that you can do this? That's really what it comes down to. So we have these 4 different branches, and then we had the 5th estate, which we used to call the media, free speech, the First Amendment. But they've joined the Democrat Party. So we don't really, they don't ask the questions or make the statements that I make, because they're only one-sided. They don't care about anything more than the party itself. Sounds very Soviet, doesn't it? So, getting back to Giannis's question, let's see, we deducted time, that should be decline of some sort. Okay, so going back to Giannis's question. So what about POW and the SPY and the VIX until mid-August? Well, let's take a look at them through the algorithm. Right there's the SPY. And the SPY, is in a daily sell now for a bunch of days, isn't it? Let's see, what's the spreadsheet say too? Let's make sure we have it right. We have that right? Let's see. It says here that it's been in a daily sell for a long time. 3, 4, 5, 6, 7, 8, 9, 10, 11. Let me go see on the old platform. SPY. It's trying to go into a buy. That's what it is on the old platform. But it's still in a sell also. See that there? They're trying to do it today. We'll see. So it's been in a sell now for, and where is it at on the spreadsheet? Now this is the S&P 500 future. This is the Tech 100 future. Let's go down to the SPY ski. 10 days in a sell there. There it is. Tech 100, 15 days in a sell. 1 week in a sell on the SPY. This is the second week. And this is the third week in the Qs. So that's the magic there. And that's how we, relate to one to the other. So, we will have this now up on the screen. You know, Giannis, I think the reason why we have like 200 people looking in on a given moment, they just look in to see the data itself. I think that's what it really comes down to. But we only have an average of like 6.5 when it comes to watching the whole webinar for an hour. And that's the big difference right there. You know, I think people use it as a source to look at where the markets are, what's going on, and then they get out of it. I have a friend down in Miami that does that. He looks at he goes right to the weekly spreadsheet. I've just turned him on to the new beta program. You know, I mean, that's really what it comes down to. One of my old partners, you know, he always stares at the weekly. He's been trading for, you know, 45, 50 years. So that is the answer to all of it in the end. That's why we have over 200 people come into the webinar, but we only have 6.5 that watches it from beginning to end. I think that's the answer there. All right, let's take a sip of water. There we go. So, that's the SPY. Now, the second question, was that the VIX again? I don't even pay attention to the VIX on that level. So, you know, VIX is a lagging indicator. And so it only reacts to whatever the SPY's doing after the fact more than it is during it. It did go back into the buy, I believe, yesterday, though. Let's go find that. The daily buy. I think it jumped back into the daily buy. Where are you, VIX? Vixie, 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 you little vixen. Okay, so it needs to be a upload. So let's upload it. And we'll straighten that puppy out, too, at the same time. You know, what we can do is we can show it to you on the old platform also, right there. Hello. Hello, old platform. Right there. Activate. Yeah, it pushed itself into a buy yesterday. Right there. Looks a little firmer this morning. It's doing the cute little dance. And you can see it's in a weekly buy. Now we use the fast algo. That's why the bars are in blue, cyan, you know. Whereas we're using the fast on the daily, we also use the fast on the weekly on this one because of the beta of it. Now let's save that and put it over on the beta platform. I like the beta platform. Let's see, where is it at? Export. Right there. Export the data. And then we go to Vixen. You little vixen, you. Let's see. Let me see. Are you there? There we go. And cancel. And upload. There we go. It's getting there. So you can see on this screen there, you know, it's still, you know, it's still orbiting, I guess you could say, you know. You know, the VIX in weekly buy, in daily sell. Now it's joined in again. Maybe we're going to get a lot more new noise again, you know, that type of thing. That would not surprise me. That would, an error has occurred. Let's see, let's go like this. There we are. We want to open up the silver. And we go like that. Open and upload. There we go. All right. So let's go over to that. So there's the VIX. Also, VIXY. On the beta. It's cleaner. It's easier. It is. It's easier to read. When you're using the beta, you can put your arrow over something, and it'll tell you what the number is. See, like that. Same thing with the weekly. It tells you where it's at, if it's plus or minus. See, it's 0.196. That's what's so nice about it. It's a much easier interactive product. So, as time goes on, we're going to move over to that, and I'll just use the old platform for trading, and that's about it. So what time there should be a decline or some sort. We deducted some time, and that there should be a decline or some sort. You mean correction? Well, we've been in the correction. There's no doubt about that. Matter of fact, we're not only in the correction, we're seeing a rotation. It's not really a correction as much as it's a rotation. They're selling incredibly rich assets. Incredibly rich. The Magnificent Seven, has most of these products have gone up some crazy numbers, anywhere from, 75% to 300% over the last year and a half. Since October of last year, October of 23. Is it like that, or October of 22? October of 23, I think. They've gone explodingly up, and so what funds are doing is they're selling a little of it. When you're up 200% in something, you really think you're going to hold out for like 300% or 400% or 500%? I mean, the Jajarian brothers, they have an option book out for free, and they do this advertisement on all the financial channels. And they say it's not an option. You got to use them. In other words, it's if you're not using options or binaries, you're trading like it's 1974. If you're using options or binaries, then it's like you're trading in modern day time. That's it. There's no reason to take a risk on assets anymore. If you want to collect dividends, you buy the dividend stock, sell the call, buy the put for free, and collect your dividend. That's what a reversal conversion is. So, it is the magic of the market. That's what it is. It's the magic of the market. You could even do that thing for a premium and add to your dividend, and take a small risk compared to being just long a stock for its dividend, and then watch it go down 20% and have no hedge on it. Reversals and conversions. What happened? What got Madoff? What got Madoff in trouble was interest rates dropped. He was doing reversals and conversions. A reversal is you sell the stock short, you sell a put against it, and buy a call. So you're collecting interest on the short stock that outdoes the premium of the options. And then if you're doing the dividend side of that, you buy the stock, sell the call, and take the premium from selling the call and buy a put, which basically now you're playing for dividend yield, okay, and a different tax bracket. Reversal and conversions, okay. So, I must have done 1 million of them, and I must have traded 1 million of those things at least, and it was a tax thing. And so Mr. Madoff, who was chairman of the NASDAQ, the Tech 100 exchange, was doing that for his clients, and that was all fine and dandy. But when interest rates dropped from 17 and 16 and 15 and 14 and 12 and got down to around 12%, The client said, we can't leave our money with you if you can't give us a 12% return. So then what he did is, instead of doing the reversals and the conversions, he turned around and started doing the split reversals and conversions. So instead of doing the same call and put in the long on the conversion or the reversal, in other words, if you bought the 50 stock, the stock was at 50, you sold the 50 call and you bought the 50 put. Okay, so then he started doing what they call split conversions and reversals, and still paying the same amount of interest at 12% when it was only yielding 10%. So then he started pyramiding. In other words, he had to start finding 2% from somebody to give to the clients. So then he started hiding what he was doing. And it took me about 3 minutes to be able to tell that, and then I was told, do not, I said, let's call the Securities Exchange Commission. And the hedge fund I was working with said, no, you can't do that. I said, why not? I said, you told me this guy wants to offer you this deal. That's a fraud. Go call the Securities Exchange Commission. And they said, no, forget that we even ever told you. I was like, all right. Because every time I called the Securities Exchange Commission, they never listened to me. Called the CFTC, they never listened to me. Only when they want to prosecute me do they want to talk to me. Not when I'm telling them facts of reality. So anyway, that is how Mr. Madoff got in trouble. Instead of buying and selling the 50 call and put with his $50 stock, he then started doing the 52.5 call and the 47.5 put, which makes it a flat trade at best. Because it makes no money, and it has the potential to lose money by not making money. Because if you're guaranteeing 12% and it's only making 10%, you are losing 2%. So they gave me a whole day to figure it out. It took me about 30 seconds to figure it out. It just shows you how incompetent the government agencies are. So anyhow, a reversal and a conversion. And that's what Madoff got in trouble with, because he stopped doing them and he started doing splits. And splits, well, if you're guaranteeing 12% and you're only making 10%, someone's going to have a problem. And yeah, his investors did. He took the money from them. So anyhow, that's a way of hedging portfolios. Instead you can widen them out more, sell the call. Let's say it's a $100 stock, and you sell like the 105 call, and you buy the 95 put. Well, what's the most you're ever going to lose? If you take in $1 premium, the most you're ever going to lose is $4 forever. That's it. Doesn't matter if the stock falls to $3 a share, you're going to still have $96 in your pocket from the options, and you're still going to be collecting the dividends. So if the dividend is 2% or 3%, how long does it take to collect dividends to make up $3 on a $100 stock? What, 2 quarters? That's about it. So that's why I say funds today manage their money like it's 1974, before it was listed options. They act like they need to be totally naked and at risk every day. Why? I don't understand. Obviously, they're not smart enough to do the other thing. That's what it comes down to me. So. Reversals and conversions. All right, let's go over and take a look at, if there's not any other questions, we'll go take a look at the spreadsheet on the currencies. And we already saw where the dollar index was. Let's put it up on the screen again. The screen. Right there. And so it's moving up. So we would assume that you can see here, there's the euro. The spot euro is 3 weeks in a buy, 3 days in a sell. Oh, Not really. I saw the sheet. What do you mean? What? Not really. Let me just go over to this platform here. We'll take a look at the euro. All right, euro. No, we didn't even put it up on there. How about that? Let's open that puppy up. Open workspace Dookie Day week right there. Now we're going to put up the euro. But what didn't you see? The reversal? You don't understand the reversal conversion? I can explain it softer and easier. That's no problem. So basically, one is to collect dividends. The other one was the reversal, sell, is to collect. When you sell stock short, you collect interest off of that. And so you're collecting interest. In other words, let's say you're doing it on margin. You're doing it on margin normally when you sell something short to begin with. So, and not really wanna anything. I see that heart thing drives me crazy. I can't see all the words. So let's do this. There we go. As in not really want to see anything else. Oh, you don't want to see anything else? Okay. I would rather want to hear more on what the hell will or will not Powell do. He made it very clear yesterday. He's waiting for numbers to show him that the inflation is diminishing. There you go. There's the... So what did it do? It went into the buy there. Let's move one of these buys over there. So it went into the buy there. And the next day it went back into the sell. That's a loss too, right there. That's a loss. And so that's part of that 14% of the loss that we generate. We make money 86% of the time and lose it 14% of the time. So that's what the algo does. And so then it went back into the sell there. Let's grab that sell right there. And traders, why are we not short? Because we're in a weekly buy. Unless you're using options or binaries, we suggest that you wait for both the weekly and the daily to be together if you're going to use what we refer to as the hard delta. In other words, naked long or short a underlining product like the euro or the cable or Navarra or Microsoft. That's the underlining product. That's the hard delta. So Powell has made it very clear that he is going to wait till September to make another decision. He says it's a 50-50. 50% chance yes, 50% chance no. Now the market is interpreting it as it's 100% chance yes. Because they keep on telling their clients they're going to cut rates. That's why. So a lot of money managers have to say that all the time because they say it to their clients. They can't say something on national TV or into a newspaper and then tell their clients something different. They'll get sued. What if data comes in good and continues to do that? Like employment data. Well, he's looking more for inflation. He's more concerned about inflation than he is about employment. So, if employment started to go up, in other words, unemployment started to increase. But they got that number fudged. I told you, Mr. Obama brought somebody into the Bureau of Labor Statistics, and they removed the moving average and they put a stochastic in it. So that's why our unemployment numbers are dramatically low. And in other words, it doesn't reflect everything that's going on because it's a stochastic now. It's not a moving average. So, when COVID happened, what were we, like 5.5% unemployment? It's like, it should have been like 35%. So, just drinking a little water there. So if the unemployment number started to rise dramatically, which it can't really do, but to them, a move from 3.5 or 4 to like 4.5 is a major move because it's just a stochastic. So it's like a 4 to 5% is like a 20% move to them, and they get excited, and that's in a bad way. They get all excited, and they that's maybe that's a good question, Janos. Maybe Powell, when he came out back last November, he was expecting a recession. Maybe he was thinking that, okay, I'm going to tell everybody, don't worry, be happy. I'm going to drop rates 7 times. But when you really think about it, if you drop rates 7 times, that means the economy is slowing dramatically. I mean, that's what that's screaming, That's not good. We need a growing economy for stocks to have value. You know what I mean? Jelly bean. So, another sip of the water. So, in the end result is that he's not going to do anything more today than he was going to do in September. Now, the election's coming on, and obviously there's going to be a major change in economic policy. So, I mean, Mrs. Harris, or Miss Harris, has voted in the Senate as the vice president to increase spending by $7 trillion. She did that, and it has increased by $7 trillion from her tie-breaking votes. So we know that she'll just spend and spend and spend and not care. Oh yeah, definitely earnings. Each day we will have a pre-market, after-market move until the earnings are over. Yeah, more than likely, or yeah, something like that. I agree. And then the next topic will take place, and that appears to be the rate cut in September's theme. Correct. So why do the signals all show so much sell? What signals? So why do signals show? Well, right now, you mean in like the Tech 100 and the S&P 500? It's because the Magnificent Seven, moves that thing. Over 62% of all the stocks have already reported in it. So we're halfway through of the reporting in the S&P 500. But it's it's the Magnificent Seven basically that's putting the pressure on it. Breaking news. What's this? Gersov and Wellum, part of a Russian prisoner swap. Cool. Huh. Cool. They got to do something to make Mrs. Or Mr. Biden look like they're working. No one even knows where Mr. Biden is. He's nowhere to be found. He's just out on the beaches again down in Delaware. We can tell that because we can see the helicopters from here, or a few miles over. We can see the helicopters hovering when he's on the beach. I don't know if they're showing in what thing. I mean, let's show you what we're talking about. Here's the Dow Jones Industrial Average, the diamond. Where's it at? Diamond. Right there. There we go. There's the diamond. Am I reflecting that? Here. There's the diamond. This is the Dow Jones Industrial ETF. It's been in a weekly buy now for going on a 5th week. It's 4 days in a buy. So whereas when we go and look at the SPY or the Tech 100, which are influenced by the Magnificent Seven, right there, you can see it's been in a sell for a while, since up in here. It's been in a sell. Now, no doubt we're getting some bounce out of it. This is Thursday now, and that's yesterday's close. But overall, the weekly has been down for this is the 3rd week. So that is, showing that it's a battle between different sectors, more, or let's say indices. So when we go and look at the Russell 2000, the weakest of our stock indices, it's been on a rampage rally. You can see here it's been in a weekly buy for, this is the 4th week. Now it has been in this daily sell for the last 4 days. But it's, basically higher than last week. So it's doing fine. Now, let's go over to the Tech 100. Here's the Tech 100, the QQQ. This is a stock again for representing the product. And that thing's been 15 days in a sell since up in here. Way up here. So, like right there where the line is. So it's still way down. And at the same time, it's been in a weekly sell for 3 weeks now. So that's the Magnificent Seven pulling those things down. But it's not pulling the whole market down. And I think they have a second S&P index that is not cap weighted, but it is devised like the Dow Jones, and it's actually up. So the cap weighted indexes are influenced way more from a few stocks, which has everybody all confused all the time anyway. So let's see. Can we do that one? Whee! I'd like to get rid of that heart. I don't know how to get rid of the heart on the chat line. Anyway, that is the answer to that. So traders, now we have the spreadsheet up there. And if anybody would like to have that spreadsheet, just go to chicagoquantities.com. The email address is chicagoquanttechnologies.com. And Robin will make sure you get a sheet of it every day. And that's the action to that. All right, what else have we got going on here, traders? Oh, you know what? We got about 5 minutes left, 4 minutes left. Let's do this. Let's go through all the things we normally go through so people can tune in. There's cable. You can see cable. Whoop, you can't see cable. So let's go back to that again. So there's cable, just like Euro, on a smackadoodle, weekly buy, daily sell. It's been in the sell since up. Whoa. It's been in a sell since up in here. Let's take a look at the Swiss franc. Swiss franc, same way. It's been in a sell for 2 days. It's going in and out, in and out. And you can't take the longs. You can only take the shorts because we're in a weekly sell now for, is it 4 weeks? Let's go find it on the spreadsheet. I think it's 4 weeks, just to confirm. One week in a sell. So this is the second week in a sell. I think what it did is it was in a sell from here all the way out to here. It went into a buy off of that weakness and started to get daily buying going on, and then fell right back into the sell off of this. And so it's back in that sell again. Remember, whereas the cable and the euro, when it's going up or gaining against the dollar, in this particular pairs trade, the Swiss is gaining when it's going down against the dollar. There's less Swiss to a dollar. And you can see we pierced the 87 area. We talked about that way back in here. We thought it could get to the low 88s at least, and it has. And now it's breaking more. All right, now from there we go over to the yen. The yen was pressing down, but it's kind of popped back up. So why do the signals show so much sell? Can you show VIX again? Sure. There's the VIX. And it's not really letting go. Namely, got any levels where it might act strangely. I would imagine that just trying to take out this high right here of 1805. Traders would start to look for it to run up to the 21 30 area, something like that. And then you can see when we go back even further, it was up in the 23 area, 2308, back in October of 23. And that's probably being watched. Then back in March of 23, it got up into the 30s, right there. And then in October of 22, it was almost up to 35. It got, there's a 35 right there, a 34.50, I guess, 34.88 right there back in late September. And then here is almost got to 40 in January of 22. And let's see, there is the Trumpy V bottom right there. You know, it got up when the world economy shut down. It got up to 69, 70, something like that. No, it got up into the 80s, 85. And then, within, we were screaming and yelling, V bottom, V bottom, V bottom. In this case, then we kept on saying on the volatility, V top, V top, V top. And it was going to come down hard, and it did. It fell from the 80s down into the 20s in a month and a half. So, if you want to explore ideas, I guess you could say, go, Fibonacci the 12 to the 85 and see where it's playing. We could do that right now. Shall we do that? Why not? Let's do that. I can do that. I can dance. You can dance. Remember, the Federal Reserve was using the COVID at the same time to get rid of the put funds. And they did. They sent them in, all 5 put funds, were selling free puts against the Fed, and they were raking in billions of dollars, and Mr. Bernanke was not happy about that. He mentioned it a few times, too. So we'll go like this. There we go. Now let's spin back over to there. Hell, we're not even touching. Let's see if we can track this. Where is like the 0.2? Look at that. We have to keep on going. The 0.23 or 23.6 is all the way up into here in the 30s. And so then what you would do is you would Fibonacci that, for you Fibonacci fans. You would Fibonacci that to there, to the lows, and see how it's playing with that. You can see it's hesitating in, what do we widen this out to? We go like this. So it's playing with the 0.38 right now. That's what it just played with, the 0.38 of that. Okay. There's the levels. I am spotting that the 17 level acts as a magnet. Yeah, you can see that. More like the 19 area, really. But 16 and change seems to be like a resting stop. Look at the blue line, 16.21, right there. And then, let's see, I'm still thinking who bought those large amounts of VIX calls? Somebody who is short volatility. No one spends $500,000 without being hedged. They're not going to throw $500,000 away. Even if it's a multi-billion-dollar fund, they will do it against something. Another thought is, what fundamental event could push to 25? Probably a shock, like a violent shock of war. If Iran attacked Israel directly, and Israel, leveled their refining and everything else and sent them back into the Stone Age. I mean, they obviously have the power to do that any day of the week if they want to. So I'd imagine right now, I would say that's why the United States has already announced they will defend Israel against Iran. So they moved another aircraft carrier into the Mediterranean over the last couple of days. So, that would put a shock into the world economy, I would think, because the Israelis' only other answer is to, instead of killing people, is just level their refining ability. They're drilling and refining, so it would take a couple million barrels of oil off the world market, which would drive prices up, which would increase volatility. So you're basically betting on war. All right, traders, I think we're out of here. Did we get a chance to do the rest? Let me just show you where gold is and silver real quick, and then we'll get out of here. There's gold. Gold is back up again, trying to get up into that $2,500 area. And Silverado, battling to get to 30. Copper is trying to lift. It got into the buy yesterday, but it's rolling over again already. Platinum having its issues. Crude oil, big lift yesterday, holding on flatly up to the 78s from the 74s. And that's probably why you see strength in the VIX. Heating oil, right there. Same gig. Trying to get into that buy. It's got the green and red yesterday. It's really, it's in a weekly sell. Both of them are weekly sells. Oil and heating oil. So, all right, traders. This is Doc from North America. Catch you all tomorrow. Same time, same channel. Actually, tomorrow's what? TGIF. So that's pretty cool. Happy trails to... We've been doing it as a rap song. Happy trails to you. Happy trails to every one of you. My dookie friends. Catch you on the flip side. Over and out. It's my city days.